Back with the market and just revisiting what the oil counters are doing right now. You have WTI that's at 116 almost. Little bit cool off. There was a 30% spike. We're now seeing a 27% spike. Insignificant cool off at best. But there is some hint of a cool off. Brent right now 25.5% higher at $116.3 a barrel. This is what is happening. Natural gas is seeing a spike of about 9% right now as we speak. So that is also something that you want to be watching out for. To put more perspective on what these numbers mean and what they could look going ahead in the next couple of weeks, while it's anyone's guess in which direction this war could be heading, let's just try and understand what the worst case scenario could be when it comes to WTI and Brent. We have Mr. Jonathan Bharat, the CIO ETO Group, joining us from Sydney this morning. Thanks so much, Jonathan, for taking the time out and joining us. Good morning, first of all. Talk to us about what is your base case and worst case scenario when it comes to Brent prices, crude prices. What are you penciling in at the moment?
Right, it's been obviously a very volatile day. Had a weekend of a lot of shocks, and the market's trying to work out exactly what's going to happen. But I think with the Straits of Hormuz shut, I think it does add this additional layer that we're seeing. But I do think that sometimes Monday morning, the market does push itself a little bit too far. Remember, the Straits of Hormuz account for 20% of seaborne oil. So we're already upwards well over that at the moment. So I think, if anything, it's a little bit exaggerated at these levels. Let's see what Europe does. Let's see what the US does as well. But with prices even at these levels, it's certainly going to affect a lot of markets, in particular the equity markets. But at these levels, I think it's a little bit overdone, but the fear could still drive the market.
Jonathan, how do you look at Asian economies reacting to this crude shock which is coming? None of them have been prepared for it. Do you think that there is going to be an economic impact to many of these economies who are dependent on crude from the Middle East?
Absolutely. I think when you look even from the early 1970s shocks and the most recent one, the 2022 shock, that has affected the global economy, this is the same. The longer the conflict goes on, the more sustained the prices will be at these levels. If that's the case, then we have that stagflationary environment, cost-push inflation occurring. And as a result of those countries that mainly import oil, like India and like Japan, not just oil, but also natural gas, it's going to weigh heavily on the economies. It's inflationary. It'll drive interest rates higher the longer these rates are at these levels. So hopefully it'll solve itself. But I think there are major concerns with a lot of equities, particularly those countries who are focused on energy and focused on import energy. So it is a concern. And I feel that they will see a deeper correction in a lot of the economies and a lot of the equity markets.
Jonathan, it seems the WTI is reacting much more from a volatility perspective as compared to the Brent, because normally WTI is at a discount to the Brent, but at this point in time both are trading almost at par. Do you think that there's a speculation also which is underway and that's leading to this price rise?
I think it is. I think it is this fear factor that is controlling the market at the moment. When you lose 20% of the seaborne oil, you could probably expect 20% of a correction in the price. Now, we've overdone that. We're by about 20, 35%. And it does happen on that Monday morning trade when the markets try and look at it. And then rationally, everything comes back into play, when Europe or when the US come back, when we have deeper markets. So I do think it's a little bit overdone, although equity markets might take a little bit of a tumble or continued tumble. But in some markets, particularly India, I think it's just an opportunity. Only a couple of months ago, we were saying that Indian equity markets were valued and doing the right thing and going higher. I still think that's true, and I still think it. So I do think that any correction we do get in the Indian market is just an opportunity for people to buy.
If you look at some of the US actions which are coming in from the Middle East, they're trying to remove all the non-essential employees from Saudi Arabia, which basically indicates that they're seeing an escalation of hostilities in that region, especially in Saudi Arabia from Iran. is that also one of the reasons which will, make sure that the crude remains elevated about $100 for the near term?
I think it does. And I also think the strategy that Iran is actually employing, the US and Israel are going in there and just thumping everything. The strategy that Iran, whether it's by the new supreme leader or what, we don't know, but hitting neighboring countries, desalination plants. And if you look at Bahrain, their desalination plant was taken out, and that provides 60 to 70% of the water for that island state. So they've strategically hit things which will hurt people. And also, as we know, hurt the importers as well. So I think this type of strategy which they're informed will help sustain prices at these levels until things try and get back to normal, which will take time. Remember also that when you look at the Straits of Hormuz and you look at the insurances that tankers, now they're at levels that are unaffordable, and some tankers just can't get insurance. So that's going to take time to filter through. So if you can't get insurance, you're going to take your tanker and you're going to push it another direction, which will be more costly. So as a result of that, even if the conflict reduces in what it's doing, the conflict will still remain there, and there'll be a lot of subsidiary type of concerns. And I think that's going to keep prices elevated, which will give us that inflationary feel that we know we'll have down the track.
Okay, Jonathan, on that note, we'll let you go. Thanks so much for taking the time out and trying to help us understand this sharp elevation that we're seeing in global crude prices. Thanks once again.